Good morning, professional members. We once again welcome you to the webinar series on IBC. Today's topic is going to be forensic audit under IBC. We have the privilege of having with us Mr. Suvir Khanna. He's a partner with KPMG India and he's an expert into the forensic audit. We also have the pleasure to have with us CS Mr. Praveen Soni, who is a council member with the ICSI. I shall briefly introduce our eminent speakers for the webinar and then introduce a subject, and then shall hand it over to the honorable speakers to take it forward. Right. I'll start with Mr. Suvir Khanna. So Suvir is a chartered accountant and he is also an accredited accredited counter fraud specialist from UK. He is a member of the Association of Certified Fraud Examiners USA. Suvir has over 2 decades of financial crime compliance and investigation experience. He leads engagements for regulators, banks and insolvency professionals across Indian subcontinent and Middle East. Suvir is a regular speaker on topics related to anti-bribery and corruption, fraud and forensic accounting, anti-money laundering, etc. He authored the India chapter in Money Laundering, Asset Forfeiture and Recovery and Compliance, a global guide, which is the name of the title, which has been published by LexisNexis. The book serves as a global AML regulations database. He contributes regularly to KPMG's thought leadership publications and to news publications. Now I will introduce our the next speaker. Just a minute. Mr. Praveen Soni, okay, he's a Central Council member with ICSI. He's a company secretary, and also a compliance officer at CMS Info Systems Limited. He has a experience of a decade into this particular field. He was also the regional council member with WIRC of ICSI from 2015 to 2018. That's about the introduction of our speakers. Now we shall have a little discussion about the forensic audit. I will initiate it and take it to the honorable speakers. So forensic audit, if we have to sum it up, it is an examination and evaluation of a firm's financial records in order to derive evidence that can be used in a court of law or legal proceedings. Forensic auditing is a specialization within the field of accounting, and most large accounting firms have a forensic accounting department. Forensic audit requires the expertise of not just accounting and auditing procedures, but also the legal knowledge within the framework of audit. Forensic audits covers a wide range of investigative activities. A forensic audit may be conducted to prosecute a party for fraud, embezzlement or other financial crimes. In the process of a forensic audit, the auditor may be called to serve as an expert witness. In the criminal proceedings, he may appear as an expert. Then forensic audit could also involve situations that do not involve financial fraud. So as it is said that both the devil and the God lies in the details. So it is an investigation into finding the details, wherein we may come up with a devil there or we may come up with a God there. So the deal which is being analyzed or the financial records that are being analyzed may turn out to be completely pure, or they may expose the malicious intention of the parties involved. So that's about the subject. I would now request Mr. Suvir Khanna to take it forward. He shall also have a presentation to be shared with us, and he will introduce us to the subject. Suvir, over to you.
And in resolution professionals under the IBC code, we have done multiple engagements which are forensic audit as per the Act. And what we'll do in this session is kind of share knowledge which is coming out of our experience from forensic audit. So we'll not be really getting into too much of detail of what the law says because you already know that. Our focus today would be on forensic audit. Coming to slide 2, which is objectives of the code. I mean, there are multiple objectives, but one of the key objective is to preserve the rights of all creditors equally and to make sure that uh, uh, and to make sure that there is no fraudulent intention with respect to distribution of assets or with respect to resolution of the company, and to make sure that rights of creditors are appropriately protected. uh, I mean, from that, if we see the journey so far, I mean, these are the statistics coming from IBBI. I'll not spend too much of time, but essentially what we see, there is out of 2000 plus cases, there are nearly 1300 which are ongoing. The second most portion is liquidation. And if you really see the split of issues, it is pretty much varied: manufacturing, real estate, construction. These are the sectors which are more so impacted. But the issue is spread out. What we will be discussing today, and these are some of the key themes in for the webinar. I think the focus on fraud across the code is in multiple sections, and we'll touch some of those sections. Also, the fact that how insolvency professional works hand in hand with forensic auditor wherever there is a requirement, we'll kind of touch upon that element. We'll discuss a bit on the look back period, which is as per the code, and this is a shade of gray, because some places, there is a view that it is a 2-year period. However, in some other pockets, the view is it could be a wider period. And what are the key challenges as we do forensic audit under the Act? And what are the benefits coming out of it? So how does it help the company? How does it help the resolution professional? How does it help the creditors at large, and those who have relationship with this ongoing entity? So I think these are the key themes which we'll touch upon as we go further in. Uh, I'll just take a pause and I'll bring my colleague speaker Praveen into the webinar. Uh, Praveen, with your knowledge and experience and you being a council member as well, is there something you would want to share at this stage before I move forward?
Yeah, Suvi, thank you so much. Thank you, Institute of Company Secretaries of India and IIP for giving this opportunity and arranging this webinar on the wonderful and the burning topic. Friends, the forensic audit, which we can understand from its name itself, is basically not involved into the forensic science. The forensic audit is an application of accounting methods and the principles for detection of frauds and embezzlement of money and other related white-collar crimes. So forensic audit basically is an examination and evaluation of firms, individual and financial records to derive the evidence that can be placed before the Honorable Court of Laws. These results and summaries of forensic audit generally comes into an evidence, and where the statutory the auditor who has done the forensic audit is generally invited into the court of laws to submit and to describe the way of processes, how the forensic audit has been done and how the result has been come out. Forensic audit generally requires expertise of accounting and auditing procedures, and then expert knowledge and the legal framework around the audit work. Now, there's a wide range of investigation activities which are available, but just to before we start with the technical part from the Subir, I would like to place some distinction between the normal audit, or I can say the financial audit going on, as well as the forensic audit. So when the financial audit is basically intended to present a true and fair view of financials of the company or the documents presented, the forensic audit is aimed to present the correctness of account and to ensure that fraud has not taken place in the company. So the techniques used in the forensic audit, in the financial audit are substantive in nature, but the techniques used in the forensic audit are analysis of past understand in depth for checking out selected transparencies. So that is the basic intent of forensic audit, to examine the accounts from the beginning. Because generally in financials, the examination happen for the financial year only. Now forensic auditor is required to quantify the damages to the client. But when we see the financial auditor, they just provide that these are the discrepancies and they note down the company as a qualification into the report. But the role of forensic auditor goes something into depth. Now we see about the forensic auditing. The financial fraud investigation is the basic term which includes the analysis of various books of accounts and documents of the company, and serving as an expert in the court, as I stated earlier also, to prove or to disapprove the same. The audit can be conducted from both the parties, whether it's an respondent or the petitioners. Now, if we go on the fundamentals of the forensic audit involves basically about the forensic audit, the forensic investigation, and then the agreed upon procedures and engagement, and the predicting the unpredictable things. So these are the basic things which audit is done with an intent to establish the criteria in a manner to suitable to the code. It's a specialized investigative skills. If we talk about the tools, how we are going to hold the forensic audit, the first is the thinking forensically. We need to think from that perspective. Yes, something wrong has happened into the company or into the particular transaction, or if we are talking about the IBC transaction, we need to see that particular transaction has gone through with some fraud or some criminal mishappening has happened there. So a higher degree of professional skepticism is required, where forensic thinking is a mindset where the auditor believes that the possibility of fraud may exist and may control the overridden to accomplish that possibility. This is the basic state of mind. Now, when we talk about the common techniques, it's a reconciliation or the review of the documents or to the compare of trends over a certain period of time, or computer software programs by which we can use the artificial intelligence to understand the fraud happens into the organization, or the understanding the internal controls and testing them to understand the loop, including the interviewing the suspected people and the items. Now, if we talk about the reportings, the written report about the fraud has happened is presented to the client generally, and to file a legal case, the findings of the investigation, then a summary of the evidence collected, explanation how the fraud has perpetrated, and the suggestions for preventing or improving or coming out of these proceedings. So the forensic auditor need to be present during the court proceedings to explain the evidence and to submit before the court how the crime has happened. Now we'll take up the different common problems which are governance. We'll take it a later part where we'll examine about or we'll discuss about some of the common frauds has happened into the various big corporate houses in India. But I believe the basic reason or the ingredients of happening of financial frauds is the false books of account, bogus accounting has happened, or the unconvinced role of independent auditors, or the role of the questionable role of the audit committees and all that. So these are the basic things. Now, if we talk about the IBC companies and the forensic audit over 200 companies facing corporate insolvency resolution processes under the IBC, and that audit has revealed irregularities of more than 1 lakh crore. This is figure coming out from the recent studies. Now, if we go on the apart from the role of the IRP or the RP and the liquidator, the Insolvency and Bankruptcy Court, the IBC, has also posted duty on the insolvency professional to investigate while going through the transaction, like preferential or undervalued or overvalued or defrauding and extraordinary transaction, especially those are executed by the promoters to unjustly benefit themselves or to their relatives or the related parties that. Now, Section 18 of IBC, it casts a duty on the IP insolvency professional to collect the information relation to the assets or finance or operations of the corporate debtor for the last 2 years. So, friends, Suvik, you can also correct me if I'm wrong. the 2 years period has been given then to determine the financial position of the corporate debtor. Now, the insolvency professional cannot comply with the obligation independently and objectively, and therefore the court provides that under section 20 to appoint the accountant or the legal professional or another professional who is suitable to perform the obligations under this code. So that is the basic idea from where the thought process of forensic audit is coming on from the IBC. If we go through the section 18, the insolvency professional can engage the professional person as a forensic auditor, and the appointment of forensic auditor is always in the larger interest, because it's otherwise in the interest of the creditors and other stakeholders, otherwise which will not be get prevented. We have recently seen that the State Bank of India has ordered forensic audit of Videocon Industries, where before the company could approach the restructuring processes. Again, the RBI has also instructed all the banks to conduct forensic audit of companies having huge amount of NPS with them. And recently, the NCLT in a clarification statement laid out that only 51% vote of the COC is enough to initiate the forensic audit. So, friends, the need of forensic audit has come out into this corporate vision, and especially when the IBC matters are going on and larger size of acquisitions and mergers are going on, and just to evaluate or to have the understanding of the transaction, whether the books of accounts has been properly maintained or whatever is stated into the audit report is actually established, or the assets are actually there into the company's records of custody or not, due diligence is there. To understand the viability of these things, I think the forensic audit concept has come out, and as we elaborated the different techniques, that's the best way to have it and to understand the technicalities. Now, Subir, you can get some more points on this.
Sure. Thanks, Praveen. Thanks for that, overall summary and a big picture from a law standpoint and what the expectation is. So I think what Praveen said is basically weaved into the themes which we are going to discuss today. And moving on to the next slide, these are some of the key sections what Praveen talked about also. So if we take section number 49, section 49 under the code, which talks about transactions defrauding creditors, which is one of the most critical sections. And this section kind of talks about if the company or the borrower essentially did any transaction which is to with an intention to defraud, right? And that becomes a problem from a standpoint of the law. And essentially there is no time limit with this, which is with respect to section 49. One key point which I would want to make here, and which is a big picture point, not directly linked to IBC per se, but the issue of NPA, which Praveen touched upon. So if you really look at it, why does IBC come into picture? IBC comes into picture because of multiple reasons. One being that the banks have not been repaid the loans, the amounts are outstanding, they have become NPA, and subsequently now if the borrowers can't pay, then creditors get in charge of the company. Now, if you look at this timeline and the time scales, typically a company takes a loan, deploys it for various purposes, and thereafter, if the intentions are not correct, or if there is a business issue, either ways, company goes down, or there is challenges because of which repayment is not happening, the account may become NPA. Now, typically, this cycle may not be within a 1 to 2 year time period. Okay, this is a bigger cycle from a timeline standpoint, and at a minimum 3 to 5 years, if not more. As the exposures increase, this timeline may go up to 10 years. So the point, and this is an important distinction for us to make between various sections, and I'll talk about them as we go along, is the element of time limit with respect to certain sections under the code, and a specified timeline with respect to a few other sections. So I think that's an important point for what we need to keep in mind. Coming to the next section, which is section 50, extortionate credit transactions. Now, here the focus is the borrower has been a party to a transaction which is not in compliance with the law, which has been done intentionally, and Here, the focus is in the last 2 years, which is with respect to unrelated parties. And essentially, what we're talking about here again is if there is any transaction which has been done, which is not in compliance with the law, and the amounts have been, the funds which have been disbursed to this entity have been misused, for 2 years. Coming to section 43, which again Praveen touched upon on preferential transactions. So how do you give preference to a person over others, and how a borrower or a company in this case has really used funds in a way which is putting a person in benefit of other persons. And this is where a lot of related party transactions also come into picture. We look at this issue for forensic audit under the code. And if you really look at the timeline again, it kind of for related parties is double of what is for unrelated party, 2 years and 1 year. Now the challenge here is by the time a case is at, a company is admitted and RP is appointed and things really start to happen, typically 6 months to a year is lost. And then the company or the borrower already knows he's going into insolvency. There will be people coming in to look at transaction if there are certain issues. And if there is a challenge with respect to the timeline, which is 1 year or 2 year, many a times there is lack of cooperation. And as resolution professional, what is very important for us to understand is that this timeline is, of course, with respect to certain transactions, but there are certain other sections as well, which is, which I'm talking about, section 49 and few others, where you can go back in time to look at records, really get the big picture of what the issues have been. Of course, that would depend on each situation, but that is how entity could do that. Coming to similarly undervalued transactions, similar idea, time period similar. And coming to the last section, which is a very important section, is around fraudulent trading or wrongful trading, where again there is no time limit defined. So essentially, if you look at all these key sections under the code, of course, there is a time limit with respect to certain issues, but where there is no time limit with respect to few other. And the few other sections where there is no time limit are actually the wider sections within the code under which things could be looked at. We in the last, I would say, 2 years or so have done multiple engagements where the resolution professionals start with the 2 year period to look at, but depending on the findings, they actually extend the period. Again, I'll take a pause here. Praveen, if there is anything specific you want to raise, I'll hand it over to you.
I feel we are speaking in a very deliberate manner, and it's sufficiently we can our viewers can also understand. So please go ahead.
Perfect. Thanks, Praveen. So I think that's broadly, if you look at it from a forensic standpoint under the code, and how does that interplay with the resolution professional? Because I mean, these are not two different parties working on two different objectives. Both are working towards a single objective, which is how do you take control of the company, and how do you ensure the value is maximized so that people who are supposed to be paid off are appropriately paid off. And these are the enabling sections with respect to that. I'll also touch upon section 29A, which is on the other side as you get into resolution. And we have seen cases where promoters try to get control of the company from back end, bid to different other companies. Now, those are the issues which do keep on coming up. Now, this has been fairly well defined through court pronouncements. The reason why I'm talking about this intentionally in this section in this webinar is because when you're looking at related party transaction, it is important to peel the layers of onion properly, because there could be an issue that the person you're about to sell the company to may be related in some shape or form. So 29A actually works very closely and hand in hand from a forensic audit standpoint also. So I think this is a critical section, and believe me, in the last 2 years or so, each engagement which we have done, we have been able to identify various connects just purely from the information which is in public domain. Either it be MCA, ROC, litigation checks, or the database. which can conclusively indicate that a person is connected to person B or entities are connected. And that is critical as we get into resolution, because the key objective is to get into resolution. I mean, that's the first objective. Liquidation and other things are secondary, but if resolution can't be worked out. So again, looking at resolutions becomes very critical, and to be able to know how do you get to these linkages is also very critical. I think I'll not get into the layers of elimination, but that's broadly I thought I'll touch upon. Praveen, you're trying to say something?
Yeah, so I would like to add you something on this. Just like you just recently told about the we need to peel the every layer of the onion. So that is really having a meaningful word, because when we understood about the financial audit, people, the auditor generally believes on the letter or representations given by the management. So that goes on the responsibilities of management. But when we talk about the forensic audit, they have to start from the beginning. There's no limitation of timings. You can go beyond the financial years or any part of the year, and you need to investigate each and everything. As rightly pointed by you need to search out the website of ministry or the SEBI or the RBI or the stock exchanges or wherever in the public forum you can get the information by whatever sources you can use. But you need to have an in-depth knowledge and investigation of the matter in appropriate manner, so that a complete report can be presented. Perfect.
Yeah, sure. And I think that is where it becomes important to see the skills which are deployed, because one of the key elements which all the resolution professionals will agree to is of course, as they are looking at this mandate, it is not necessary that you appoint a firm to look at it. You can, actually deliberate all this on your own through your own teams. But many a times what happens is these skills are fairly sophisticated and very niche, and getting into knowing how you get to these outcomes becomes very critical. So from own standpoint, how do you get to better outcomes? It becomes important to look at looking at forensic or section 29A related activities in a slightly more structured manner. Now, with this, I'll come to the modus identifying, just not in the IBC related forensic review, but I've been doing forensic audit for banks, for various borrowers, I would say for the last 7-8 years. And all the experience which we have kind of gathered, we see is equally relevant for the forensic work which is done under IBC, because fundamentally the only difference is in an NPA audit, either a RBI or a bank is appointing you or a consortium. With respect to IBC, a resolution professional, IRP is appointing that. So only the engaging entity is different, but fundamentally the issue is the same. So if we look at, with that, if I come on to my next slide, and my computer for some reason is not moving forward. So I'll just touch upon, just a sec, give me a minute. It seems like some challenge on the slide. Yeah, okay. So, so I've kind of set out certain modes through which, funds get channeled, and typically there is diversion. So the first bucket, which is transactions used to funnel assets and funds out of the company. And, I've kind of listed out 6 points here. Loans and advances, intercorporate deposits, fictitious purchases and expenses, transfer of interest in asset for the benefit of another company, typically a related party, a use of bank accounts which are not reported in the books. At the end of the year, as of 31st March, you bring the balance zero. So there is no balance sheet impact, but you really don't know what was happening through the year, what were the transactions going through them. And again, transfer of assets at less than market value.
So we
Each of Praveen.
Yeah, sorry. I think for the larger benefit of the viewers, can I request if you can give some citation of the fictitious purchase made by the company, whereby the company's funds are not actually involved, but I think by bookish entries, the transactions are reflected into the company's account. So that way the frauds are going upon. Some of the citations, if you can share.
Sure. No, I'll be talking about them. So that's a good point. So so as I said, these are some of the themes. These are the top themes this through which issues are happening. But behind all this, all of these schemes, typically it tends to be a related party. Okay. Now there is a definition of related party under various laws. Okay. But what we have done on this very slide, if you see the channels which we have talked about through which the above transactions are executed, and this is fairly debatable if two unrelated parties can have or should not have a common email ID. So if I have an email ID and that email ID is being used in 10 different companies, out of which 6 technically under the law are related parties, but 4 are not related party, but the email ID is the same, what will a common layman interpret that to be? As forensic auditor or as a person who is going with a forensic mindset is going to say the same person pretty much managing the communication of all the 10 companies. Does that make them related? From a law standpoint, possibly not. But those are the things, and as I talked about peeling the layers of onion, those are the things that become important, because many a times, set of companies are registered, set of people who are operating them are common, but technically not related. So as part of our experience of doing these engagements, what we have seen is common email IDs, registered addresses, phone numbers, employees of one company being directors in others, common signatories, witnesses in memorandum, article of association, and few other documents. All that information essentially does not have a financial impact from a statutory audit standpoint, but is a very critical piece of evidence from a forensic standpoint, because if the witness memorandum of association is person A, and that same person A is running all the 10 companies, and same person is in all the 10 companies, out of which 6 are related and 4 are not, then the point for our RP is to evaluate what is going on with respect to these transactions. Now that's one key point. The other key point is non-operative companies. Okay, you would have heard about the shell company issue. You would have heard about MCA striking off, lots of companies. Now, for a lack of a better word, I'm calling them potentially non-operative companies, but they could be shell companies as well. Now, when you're looking at fictitious purchases and expenses, and this is where I'm coming back to your point, Praveen. When you look at, let's say, the vendor database, okay, and you see for a company, there are 100 vendors, okay, and you do an analysis, ABC analysis, with respect to the purchases that are being done through them, what are the payments going, what is the expense book, you do the vendor analysis, creditor analysis, and you see that there are, of course, known name, reputed names, but there are 3-4 companies which are in the top 10, top 15, but you cannot relate to them. The names do not sound that they are, you're talking about a power, but let's say somebody who is a company name X Services Limited is in the top 5 or top 7 or top 10 vendors, then the red flag should be, okay, what is this company providing the entity under review? If you don't get clear answers, try to go to the next layer. Try to go into Ministry of Company Affairs. Of course, you can't do it for sole proprietorship and partnership, but to a very great extent for LLPs as well as companies, you can get into ROC reports and see. Now, once you start to see these companies have very limited revenue, or the only revenue is what is coming from company A, which is under review, there is hardly any employee cost, there is hardly any fixed assets, there are hardly any taxes paid, everything is on a balance sheet date and then it liquidates. Things like that are significant red flags. And if there are transactions of purchases, or even for that matter sales, potentially these are round tripping which is happening, money is moving in, money is coming back, and is actually parked outside. So again, it becomes very important for us to look at some of these indications. And as Praveen talked about rightly, in a statutory audit you would not look at this, But from a forensic standpoint, you would look at for all of these things, because in a forensic audit, you will go deep down with respect to certain set of transactions. May not be all the transactions, may not be the whole year, may not be the whole 5 years, but whatever be the period of review, whatever be the scope of review, you will go very deep into it. So I think I'll just again take a pause. These are the transactions and these are the channels used. If you have any questions, I'm sure there is a link where you can keep on typing your questions out. Towards the end, we'll keep 10-15 minutes for Q&A. So please feel free to put your questions in.
Yes, we'll have the question answered at the end of the session, end of the webinar. And thank you, perfectly elaborated, Sudhir.
Yeah, thanks. Moving on to the next slide, which is with respect to misstatement and financial statement. Now, what is forensic audit? Now, there are two parts to it. The law says transaction audit, but it could be wider depending on what are the issues coming out of transaction audit. So if you look at the points which I've listed out here, which are slightly more elaborated, which is with respect to loans and advances. Funds are given to related parties or to non-operative companies in the pretext of it could be capital asset creation or it could be something else. But what we have seen over a period of time, these amounts are written off. And the challenge is when you're looking at only 2-year period under the code with respect to certain set of transactions, these transactions were actually in the prior period. And that is where not looking at time limit becomes important, because if you do an analysis of say 5 to 7, 8 years that you're supposed to have. And if you do an analysis and you see some trending with respect to related parties, with respect to loans and advances, that becomes critical to look at. Similar is the case with intercorporate deposits and fictitious purchases and expenses. We kind of talked about fictitious purchases and expenses, but to again delve deeper, if there are stock moving from a company to a seller, I think it becomes important to look at underlying records like goods GRNs for goods coming in or GRNs for goods moving out, lorry receipts, how things are moving out. In some of the engagements we have seen, it is said that at the end of the year there was 10,000 pieces of inventory of items, but if you do the volumetric comparison, 10,000 pieces of item A can't fit into warehouse A, which the company has. Now sometimes these things become important because that will not be visible in financials, for which you need other data points, but you need to be considerate that what are the elements that we need to consider. And as you appoint forensic auditors, it becomes very critical for yourself to understand the capability which they are bringing onto the table and the different ways by which they have looked at the issue. Because you need a statutory auditor or you don't need an internal auditor. You need somebody else with a different mindset. And we don't need to go in with a bias that something is wrong. We need to go with a neutral mindset. It could be okay, it may not be okay. But as Praveen said rightly, the level of professional skepticism has to be much higher as compared to an internal audit or a statutory audit. So I think those are the elements which we need to consider. As I move forward, I have kind of elaborated few other examples. For example, creating interest of asset for the benefit of another company. This is clearly coming from from the act itself, which is undervalued transactions, gifts, and things like that. We talked about using bank accounts which are not reported. We have done investigations where we see at the end of the year the balances are zero, so they are never provided in the details. But when you go back in looking at the bank statement of other accounts, you see transactions moving in and moving out to certain set of accounts which are the company accounts that are not provided to you. So again, it becomes important as you ask for the data, don't ask for the data as on 31st. Ask for the data for 1st April to 31st, the list of the accounts which were operational as well as non-operational. Because it could be that something which was not operational this year was operational in the prior period. So again, some of these things becomes important, and the right set of questions will give you the right set of answers, which you are really wanting. So it becomes very important to kind of plan out the work which we are doing with respect to the forensic audit. And I'll take a pause. Praveen, anything you want to touch upon here?
Just I need to understand one thing, because when we are talking about the fictitious purchases and expenses recorded by the companies, now this may be by virtue of recording the fictitious sales into the books, or the recording of fictitious documents while showing the invoices or transport receipts and all that. But I believe after the introduction of the Goods and Services Act, GST Act, this might have redundant, and hardly it's possible to have that kind of activities. I don't know, people are more smart sometimes and they can come out. But I think after the invoking of this GST law, this kind of activities might have reduced to a big extent, to which you put some light.
Yeah, sure. So I think that of course is an external element of GST bringing in some more external evidence that can be looked at. But at the same time, there are GST scams also which are going on. I'm sure Praveen, you would have heard of them, where entities are getting structured just to play around with the GST credit, and multiple issues are happening. So the way we need to think, and this is. This phrase I use many a times: to catch a fraudster, you need to think like him. So if you are going to take reliance on a control which is established, on which you can say, okay, now this thing is possibly coming down, then that may get misused actually more, because your antennas are not up on that element. Okay. Also, at the same time, goods may be moving out at the year end or prior to the year end, but there may be reversals thereafter. So the window dressing of accounts which you will see, and those window dressed accounts which are given to the banks, on the basis of which you're getting facilities extended, actually may not be genuine transaction even from a GST standpoint, because you can always have reversals. So I think various models which get used, and again, fictitious purchases, transactions, sales. There are many other schemes. So, for example, if you are into a manufacturing setup, saying that you are going to construct a new building or a new premises in itself can be a capital expenditure, for which you appoint a third party to manage the whole job, and you pay him X amount, which is your total budget. And once that amount is paid, your GST is also paid, but essentially there is nothing on the ground. So when you do forensic audit, you actually do site visits, and you figure out that this payment was given 3 years back to construct a building. And interestingly so, there is still a cricket ground there where there was supposed to be a building. So where is the building gone? Again,
we have seen the similar. We have seen the similar kind of transactions with the Island FS matter recently, wherein forensic
I'm not going
to
to
loans
the
given.
company specific. Praveen, I'll not go into the specifics of any companies, but these are issues which are across, right?
Yes.
And we see this on a day-to-day basis. So I think those are the points which we need to kind of consider as we scope out the work which we are doing even from a forensic audit standpoint. Okay? I'll quickly move on to the last few slides. We have 10 minutes left. What I have done here is I have analyzed Central Vigilance Commission's report on the top 100 fraud cases which have been reported to CVC by all the banks, public sector banks most. Okay. And if you look at the modus, actually these are the top 5 modus which have been used: fund diversion through shell companies, through accounts which are outside the consortium of banks, fraud related to collaterals, fabricated debtors inventory, which we have kind of talked about a lot today, forged documents, forged signature, things like that. And especially a lot of trade-based money laundering comes into place here, because the funds move out of the country and then you have no way of getting it back also, and then frauds perpetrated by employees. So I think these are the themes. And again, when you look at from your standpoint as RPs, I think the question which comes is, okay, when you're going to do forensic audit, how are you going to tackle some of these things? Because these are the common issues which have been existing with respect to top 100 fraud cases. Again, moving on further, there are some concept of phoenixing, which is essentially saying how do you asset strip. This slide will be circulated, but essentially we kind of talked about it, how assets are created by moving funds outside. So I'll not get into the details of it. Really well elaborated case study on the deck. And the two case studies which you can go through as you get the deck, both are on phoenixing. The concept is how do you strip the assets and move funds out of the company. And the last slide which I'll talk about is how do RPs and forensic auditor work together. I think the first point is information sharing has to be transparently between both the parties, because both the parties are working towards the same set of objectives to protect the company, to protect the interests of the creditors. What we have seen in the last 2-3 years is management access becomes a key problem. The company where you are going to do the audit or you are going to do the investigation, they do not cooperate, they don't provide information, they do not give you time. And really, forensic auditor is not CBI, EOW, that you can go and catch a person, send a notice, and call them to your office. You are actually working in a close coordination with RP, and you're trying to facilitate it. Okay. At best, what you can do, you can report it back to the RP that there is lack of cooperation. And the third point is close coordination between three parties, which is essentially the RP, the forensic auditor, and the company under review. Because if that coordination is not there, the forensic audit report ultimately will say we were not able to get access and hence we can't comment on certain transaction, which is of no good use. So really, how do you set the environment in such a way that RPs are able to facilitate access to the information, are able to facilitate access to the right set of management personnel, and the forensic auditor is able to do the work? Many a times what we have seen, this is the investigation, this is the transaction audit, there are issues which come out, which is where, as Praveen rightly talked about, computer programs, forensic imaging, digital evidence recovery, all of these things become important. We have not touched upon that today so much in detail, but I would say that when you're looking at getting evidence which will be admissible in court, evidence could be broadly in three categories. One is documentary evidence, which you may get from books and records which are within the company. You will not have access to third parties, but you have one. The second is the verbal statement, the statements which are given by management personnel. They can come as witness. That's the second set of document. And the third set of evidence is digital evidence. The emails which are sitting in the system, the information which is sitting on the server, two sets of accounts which are being managed in Tally or in some ERP. How do you get to all this information? And that is where digital evidence recovery becomes very critical. And under the IT Act, there are procedures which are defined. You can't just go and take somebody's laptop. There is a legally admissible process which is to be followed. And if you don't follow that process, you will actually make the whole electronic evidence inadmissible. So again, it becomes very critical to know what evidence is important, what needs to be prioritized, how do you get it, and that interaction between RP and forensic auditor is very critical upfront. With
Yes.
that, I'll take the pause and give it back to you, Praveen. I know we are now into the Q&A zone. So over to you, Praveen.
Thank you, Suvi. I agree and understood that this kind of transactions become typical when the process is defined and the promoters or the companies are not cooperating. At the same time, it would become typical to understand if the company is making duplicate system of accounting and two kind of separate accountings are made. One is to share the other people outside as government or the regulators, and the other one is for its own system. So that is the complete details in factuals all that. So Thank you, Suvi. I think we just had a complete brief description on the forensic audit, and that is pertaining to the IBC. Now we have certain questions, set of questions in the remaining time, which we will take up. Nitin, can you please start with the questions?
Yes, with your permission, I'll take it up. Okay, the first question, which is a really interesting question.
It says that, I mean, it's actually addressed to you. It says, as a forensic audit is a level 2 audit done when the normal audit is already done. So, as a preemptive measure, especially for independent auditors, can you please suggest few instances which can be said as red flags, basis which forensic audit can be demanded by them rather than waiting for the company to go into IBC or regulators asking for it. So, it's basically about what are the preemptive measures which can be taken care of in order to either foresee that a forensic audit can be ordered in this case or otherwise.
Can I speak on this?
Please, sir.
Yeah. See, Nitin, I believe we understand in the beginning of my session when I spoken about the differentiation between the financial audit and the forensic audit. So, financial audit is by virtue of compliance of the law and to ensure the compliance and to fulfill the regulatory requirement. But the forensic audit is taken by its own willingness when there is some thought, some instigation in the mind of the people that there are some fraud has happened which I am not able to figure out, or something is wrong going on into the organization or at some other place. And forensic audit is made for some specific part of a division for a specific period. It may be for any term also. Let's say if I am looking for a sales division, then I'll go with a lease rental income. There I feel if something wrong is going on, so we can correct me later on. So I need to investigate on that particular part only, for which I am looking, as we told, IBC section 18 is giving you the authority to hire a professional who can do this forensic audit for you. That can be an advocate or other professional also. So that's the basic, the good design of this theme is that if you want to investigate something deeper into any particular transaction where you feel something wrong has happened, something fraud has happened, you can advise for a forensic audit. That audit can be advised. Recently, we have seen example when the RBI has given the instruction to the banks where whose NPAs are there, and SBI has given NPA for some of the clients where the loans are going into non-recoverable mode. And when the government is giving, when the companies are in sinking position and they are not able to perform, sometime when two corporates are coming out with an option of amalgamation, merger or acquisition of the company, and just to ensure the authenticity of the audit reports and the financial transaction done, and the comparison of the money lying with the company as well as the financial statement and the bank statement, just to ensure the correctness of all these things, the company goes for the forensic audit. And these all reports are made in a manner that to be presentable before the court of laws as an evidence, and that time that forensic auditor is also expected or supposed to be appear in the court of law to give an evidence and to tell the court that how the process has happened and how realistic and reliable this is. So we want to add on this.
Yeah, sure. If I can add, I think two simple points. Nitin, I think your question and the question of the audience is how can they initiate forensic audit on a proactive basis as board of director audit committee members? I think under the Companies Act, fraud risk management is very clearly the board responsibility, management's responsibility. So if independent directors or certain set of board members feel that there is a problem within the company, Companies Act very clearly enables them to take action. And actually, if they don't,
It is not coming. I think Suvir is frozen.
I think some technical issues there. We are not able to connect the Suvi. Anyway, Nathan, can you take up with the next set of question?
Sure, sir. I will take up the next question. So the next question.
Forensic audit has to be made prerequisite for resolution process and first step in the CIRP wherever we have small indications of mischief. So this is a question. So should it be made a prerequisite for the resolution process? I think the answer must be no. So every resolution process cannot be subject to a forensic audit.
process, because initiating of the process, we should not start thinking from in a fraudulent manner or the same eye. If something wrong, we can see. Yes, I think Suvi is there now. If something wrong, we can figure out. Then only the companies generally order for the forensic audit. Otherwise, per se, ordering of the forensic audit is not advisable.
So, so if you can, or so we can define as to what is the threshold. I mean, when which is satisfied, then the forensic audit can be ordered.
Sorry, I didn't get your question, Nitin.
So it says
that forensic audit, can it be made a prerequisite for the resolution process and a first step in the CIRP whenever we have a small indication of a mischief?
I would say, and really that small is how small needs to be quantified, because if that small is in thousands of crores, couple of crores, so I think, I mean, you really need to think about it. But if it is 500 100 crore plus issue, even in a big company, it is a material amount, because you may have raised funds from multiple banks, and bank A may have an exposure at best of 20 crores. So for him, that 100 crores is a very big number. So I think that is RP's decision and judgment in consultation with the bankers. But essentially, him, if he thinks doing an investigation upfront on a specific transaction or a matter would help, I think it is recommended, because you only come to know better details, and as you value the company also, you are able to really get insight. Because even if somebody is going to invest in it, they are going to do their own diligence in some shape or form, and those diligence are going to find some issues. Now the value is going to go down subsequently, because their question would be, we have found two, I don't know how many more are sitting. Actually, it becomes helpful even from getting a right valuation to say, okay, he appointed XYZ to do this scope, so, and we have identified no issues or few issues, so they can take reliance on some of these things. And it actually helps the whole timeline, because multiple investors can be given the same report instead of multiple diligences. And given the 330-day timeline now, every day has a lot of value. So I think that is how I would answer this.
Would you like to add
to it, or should we go for the next question? Okay, perfect. So the next question is, can the financial creditors holding only 4%, it's mentioned 4%, maybe a particular case, demand forensic audit and succeed when the majority does not agree on that?
So I think there are court judgments on this. So I think beyond a point, I think it's 51%, if I'm not mistaken now, the court judgment. So I think there is a democratic setup also here. But I think even if a bank feels that there is an issue, I think they should raise the voice, because the regulatory environment is fairly intrusive. You don't want that 3 years later you get a question that you knew there was an issue, but you didn't really bring it onto the table, and there was something wrong in your own intention. So I think it is important to table it. Thereafter, of course, there is a percentage and all that which comes into picture. But I think it is important to table such issues which are coming to the notice of bankers.
Perfect. True. Nitin, next.
Okay. So, it's a question
I bring up here. So, what are the liabilities of the statutory auditors in case a forensic audit is ordered and then something, malicious is found there, and it comes out that perhaps they also conspired with the company?
Yeah, sure. So I think 2-3 points which are important to understand. I think Praveen in the beginning did talk about true and fair and correctness. I think that differentiation. So I think that is very important to understand what is true and fair and what is correct. I think that fundamental difference needs to be in the mind of each person who has this doubt, and all RP should also understand this. Number one. Number two, statutory audit is a financial audit, okay, and it relies on what management is giving to you, okay. If the management is misrepresenting and you have no way of getting to that information. For example, they have said we have purchased something from company B and this will be delivered after 6 months, and that 6 months is after the cutoff period. They have given you the invoices, they have given you the payment details, the payment has gone out of India, that entity does exist, but 6 months later, you figure out that that entity was a sham company. Now what can the auditor do in this case? So I think it is very important to understand forensic versus statutory audit, and forensic auditor will go beyond books and records, will go to the street to figure out what is the information, what is the intelligence, and will use that intelligence to feed back into the loop. I don't think so Institute of Chartered Accountants has given out any guidance note for statutory auditors to go and gather intelligence which is of the nature of hearsay and then use it to do financial audit. So I think it's very important to understand, and auditor bashing is a common phenomena now, but I would that is how I would try to distinguish it. But if there is somebody where there is an issue, there is some collusion, and it is proven there is treachery in the country, I think we should let the process run and then get to those things.
So I would like to add you there. I believe when this forensic audit cannot be think upon or thought like a hammer over the statutory auditor, because they are doing their duties in performance of the guidelines whatever being provided to them. As far as the forensic audit is concerned, their scope of area is very unlimited and they can go to any extent. And that can be a situation in any company. But if there is really a gross negligence on the part of the statutory auditor, which we have seen in the various corporate frauds, lastly we have seen into some of the past 4-5 years. I think NFRA is the authority now, they are taking some actions. And if gross negligence is there, I think the Institute of Chartered Accountant is also taking some action. So, but that cannot be seen as a precedent and as a routine practice. So that is my view.
Yeah, sure. Thanks.
So, I mean, can we say that a forensic auditor is not required to have a critical eye over the financial statements of the company and, I mean, come up with something which the statutory auditor missed out? So, can we conclude like this?
I said, can we say that the forensic auditor, if he's appointed and he's not supposed to have a critical eye over the
records of the company and analyze the financial records in a way wherein he can point out something which has been missed out by the statutory auditor?
I'm actually, Praveen, do you understand what Nitin wants to do?
I understood, but I can say the forensic auditor should not be in a position or in a responsibility to have a critical eye on the financials, because his duty is to understand and identify and come out with any particular part of the financials, not the overall transactions. He should not be regarded as a second auditor, an auditor or supreme auditor, something like that. So his part of working is specified in a very specific part where he need to make a deeper investigation and apply thought process and techniques just to come out with the result that any fraud has happened into that entity or not. So that's a basic differentiation between the forensic and the statutory audit, and both and any one of them cannot be used or cannot be termed as a superlative over the earlier one. Forensic auditor. So there's no branding has been given by the Institute of Chartered Accountant or Company Secretary or any other body under IBC to identify the forensic auditors.
Right.
Thank you very much. With this, we are about to end the session. I think, yeah, that was the last question. So I thank both our eminent speakers for their very valuable inputs. I'm sure all the professional members who must have got benefited by seeing this webinar, and they must have enhanced their knowledge and understanding on the subject. I thank you once again. Thank you.
For arranging and handling all this assignment, and on behalf of the Institute, I place my sincere thanks to Subir for arranging and sharing your time for handling this and addressing this webinar on the given aspect. And I believe the discussion what we have happened is really going to be useful for the audiences which we have addressed. And after some moment of time or some days, we will come out with the video recording of the webinar also, which will be shared to the people through appropriate channel. Thank you so much. Thank you, Institute, for giving the opportunity. Thank you to the President of the ICSI for giving opportunity on this wonderful and the burning topic.
Yeah, thanks Praveen and Nitin, and really appreciate ICSI and Institute Insolvency Professional Body inviting me. So it was a good interaction. I also learned few things as I went along. So really appreciate these deliberation and would be happy to partner in any further discussions and deliberations. Thank you.
Thank you very much.
Thank you. Thank you so much.
Thank you, Praveen sir.
Thank you, Suvi sir. Thank you.